Recovering the cost of finance. Infinite banking made simple. When we make a purchase, we finance it either by paying cash or by using someone else's money. Let's take a look at using someone else's money in traditional financing. In this case, we're going to purchase something for $10,000 and we're going to borrow that money at 5% over 10 years, which is going to make our loan repayment $1,295 a year for 10 years. After 10 years, we will have paid $12,950 to the lender. $2,950 of that is profit or interest to the lender, and $10,000 is the money that we have repaid of the principal that we borrowed. When we pay cash for something, we have to save up enough money to make the purchase to begin with. However long it takes us to save up $10,000, if that $10,000 could earn 2.75% over 10 years, we would see $10,000 change into $13,116.51. But if we spend that $10,000, we don't earn that $3,116.51 of interest. It's lost to us, as is the $10,000, because it is gone because that was the purchase price. And that's the problem with paying cash for things. It doesn't end once the purchase is made. If we don't replace the money that we spent, the compounding keeps working against us. And after another 10 years in this example, this same purchase would have cost us $17,204.28 instead of $13,116.51. So the total cost when paying cash in this example was $13,116.51. The total cost when using traditional finance was $12,950. This means that if we would have kept our cash earning interest after 10 years, we would have had $13,116.51, and used traditional finances, we would have paid out $12,951, and we would have pocketed the difference of $166.51. Infinite banking is a way to pocket more money when we make a purchase, and it's also a way to recover the cost of what we did purchase. So how does it work? If we fund a whole life insurance policy that is dividend paying or participating at $100 a month for 10 years, we can generate $12,207 of cash value and $86,222 of death benefit. Then we have something that we can leverage. We can leverage this policy and the insurance company will loan us their money. We can borrow that $10,000, and if we just pay the insurance company back as if we were using traditional finance at $1,295 a year, then we pay $12,205 back to the insurance company, not $12,295. And the reason is that the growth of the policy that's taking place is helping us to repay that loan. Over the course of this 10 years that we've had the loan outstanding, our cash value has grown by $17,193, which means that we have recovered 100% of the $12,205 we paid for our purchase, plus we have an additional $4,988 that we can use and do whatever we want with. To start recovering the cost of finance in your life, call or text McFie Insurance at 317-912-1000 or visit us on the web, www.mcfieinsurance.com.
That's my dad showing you how you can use infinite banking to recover the cost of finance. Dad built a presentation that goes along with this video. You can get that presentation as a free download. Use the link below to get the presentation.